Okay, yesterday, December 18th, the stock market took a beating. It was down about 3%, the S&P 500. The NASDAQ was down even more, about 4.5%. Bitcoin got hit as well. It was pretty much risk off across the board. Why did it happen? Well, Jay Powell, the Federal Reserve in the US, he cut interest rates by 0.25%, which was expected. So you wouldn't think that equities would sell off if they cut rates. But what he then followed to say was that they see higher inflationary pressures next year and that they are probably only going to cut interest rates 1 or 2 times, not the 3 times they'd previously stated. And that's what rocked the markets. So they're now, the Federal Reserve is now faced with this problem where they have they're expecting higher inflationary pressures in 2025. But the employment data, the growth data is not super strong. It's not weak yet, but it's not super strong. So you have this inflationary problem, which is preventing them from cutting as much as they'd like to cut. But the growth data is not strong enough to justify these level of interest rates, meaning 4.25% in the US. Canada, on the other hand, we face a different situation where our economy is weakening. Inflationary pressure is at target or below target. However, these forces south of the border, for example, the currency exchange rate, which has been collapsing, Canadian dollar is collapsing, dollar Canada is exploding higher. This will eventually, make its way to inflation because a weak Canadian dollar is inflationary. So if this exchange rate continues down the path it's going, we will eventually see inflationary forces in Canada, especially if there's inflationary forces south of the border. So that's something to keep an eye out for. What does this mean for rates and mortgage rates? Well, it makes it more difficult for central banks in North America, especially the Federal Reserve, to cut interest rates as much as they would like to stimulate growth. So we'll have to wait and see. I mean, right now it's kind of just a concern from the central bankers, and that's really what rocked the equity markets, was that Jay Powell was less certain about which way interest rates are going to go in 2025. And that uncertainty hit equity markets hard. So we'll see where we go from here. But that's what happened yesterday. Take care.